Good morning. Here is your Executive Intelligence Summary for February 12th, 2026. Today, we're tracking some fascinating movies, from high-stakes trade diplomacy to major domestic projects and some really telling market trends. Let's get right into it. Here's our operational roadmap. We'll start with the lead story on a sudden U-turn in U.S.-India trade talks. Then we'll hit macro, politics, and governance. After that, we'll move to corporate intelligence, digest some key editorials, and we'll finish up with the market close.
All right, let's jump right into our lead story. We are looking at a surprisingly fast and very public backtrack on a new trade framework between the US and India, and it seems to all boil down to some extremely sensitive domestic politics.
So, here's the situation. An interim trade deal is announced, but almost immediately, the White House has to pull back and actually edit its own fact sheet. So why the sudden reversal? Well, it turns out the U.S. version contained language that wasn't in the joint agreement, and that, you guessed it, kicked off a political firestorm in New Delhi.
Let's dig into the specifics of what they erased. You can see they removed a reference to certain pulses. Now, for millions of farmers in India, pulses, we're talking lentils, chickpeas, are not just a staple, they're a massive political issue. So any change there is a very big deal. Also gone, any mention of a digital services tax. And maybe most critically, any language that sounded like a binding commitment from India.
And that brings us right to the heart of the problem, this massive $500 billion figure. The White House fact sheet called it a commitment, but Indian officials fired back almost immediately, clarifying it was merely an intention, not a done deal. You know, in the high-stakes world of trade negotiations, that single word change is absolutely everything.
So, what's the strategic implication here? Well, this whole episode puts a real dent in the credibility of the negotiations. From now on, you can bet that any announcement is going to be viewed with a heavy dose of skepticism. It's just a stark reminder that domestic politics can derail even the most carefully crafted international deals, and it can happen overnight.
Okay, let's broaden our aperture now to macro, politics, and governance. We're tracking 3 important updates for you on this front.
First up, a major political development in Bangladesh. The country is holding its first general election since the 2024 uprising, and officials are forecasting a really strong turnout. They're actually describing a mood of euphoria, especially among younger voters, who they argue felt completely excluded from the process under the old regime.
Next, we turn to Delhi, where the government just gave the green light to a huge new infrastructure project. We are talking about a 12,014 crore rupee expansion for the Delhi Metro. It is a massive investment in the city's public transit network. So what does that get you? It's going to add 16 kilometers of new track and 13 brand new stations with a target completion date of 2028. But this is about more than just a bigger metro system. It's being framed as a crucial piece of the city's prep work for a major global AI impact summit that's happening next week.
And our final macro story is a fascinating piece of analysis on a persistent challenge with government spending. Just take a look at these numbers. It shows that major flagship programs consistently underspend their budgets. The Jal Jeevan mission for water, for instance, has only managed to use 62% of its allocated funds. It really highlights this ongoing bottleneck in getting approved money out the door and into the economy where it's supposed to be working.
All right, shifting gears now into the corporate and business world. We're tracking 3 key developments today, covering regulation, banking conduct, and tax revenue. Kicking things off in the auto sector, we're seeing a really interesting split on new emission rules. On the one hand, light commercial vehicles, we're talking smaller trucks, have been granted relief from the tougher standards. But at the very same time, competitors are fiercely opposing any similar relief for small passenger cars. It's a great example of just how messy and competitive the regulatory process can get. Now, this next one is big. India's central bank is proposing a major overhaul of how banks are allowed to treat their customers. The new rules would demand your explicit, recorded consent for every single product sold. They also want to ban coercive cross-selling. And, I think this is really important, they're taking aim at so-called dark patterns. You know what those are? The intentionally confusing designs in banking apps that trick you into making choices you didn't intend to. This is a potentially huge win for consumers.
And a quick vital sign for the economy. Net direct tax collections are looking quite healthy. They've hit 19.43 trillion rupees so far this fiscal year, which is a jump of nearly 9.5% over last year. That's a pretty strong signal for both economic activity and tax compliance. All right, let's turn to the opinion pages and see what the experts are debating. We've got 2 key arguments from the editorial digest today. one on market psychology and another on the fundamentals of democracy. First up, an editorial from Mint has a very direct warning for retail investors. The message is simple. Don't be bedazzled by the recent surge in gold prices. The argument is that this rush to gold could be a classic late-cycle signal, a sign that the market might be getting overheated.
And if you want to know why they're concerned, well, this chart tells the whole story. For the first time ever, monthly inflows into gold ETFs, that's funds that track the price of gold, have actually outpaced inflows into equity mutual funds. The editorial's point is that while gold is shiny and feels safe, it doesn't actually create economic value in the way that investing in productive companies does.
Our second piece, from Gautam Bhatia, tackles a much more contentious subject, the process for revising India's voter lists. He poses what is really the central question: how can this revision process be considered legitimate and trustworthy by the public?
And Bhatia says that for this process to have any credibility, the Election Commission must answer 4 fundamental questions. 1. Why now? What's the urgency? 2. What's the actual evidence to back up claims of widespread errors? 3. Why are common proofs of identity, like the Aadhaar card, being excluded? And 4, and this is a big one, why does the burden of proof seem to have shifted onto the individual voter? Without clear answers, he warns, there's a real risk of disenfranchising legitimate citizens.
Okay, let's wrap up by taking a look at the verified closing numbers from the markets.
So it was definitely a mixed picture at the close. The benchmark index, the BSE Sensex, took a significant hit, falling by over 880 points. But if you look deeper, it was a totally different story for smaller companies. The mid-cap and small-cap indices actually had a pretty strong day, both finishing well in the green. And that concludes today's briefing. Thank you.